Right, Ledges. So this is just a breakdown on Euro Aussie and Euro New Zealand. Okay, I think there's potential for a trade. So if you wanna like avoid dollar risk, maybe like crosses that stand out to me. Okay, so in the FX review I did, not so long ago, a couple hours ago, um, I didn't mention it in there, so I'm just doing a separate breakdown, detailed breakdown on that. So what I'm gonna do is, because it's Euro Aussie, Euro New Zealand, and I've broken down Euro USD already, um, and obviously, like I said, dollar risk, using Euro Aussie, sorry, Aussie New Zealand, to see which one's the better one, Euro Aussie, Euro New Zealand. Now I believe they both look, decent, but we can break it down and take it from there. So looking at the Aussie New Zealand quarterly chart, very very bullish. Okay, is this bottoming out? I don't know. It's been in a massive range. It's only breaking out if it's. I would only say break out if it's broken out. So for now, it's still range bound. Okay, so it's into resistance. So if we break this down, there's a couple of levels you can use, but I'm just gonna go with this one here. And reason being, I can refine it if I get to the monthly, but you got this high there. So when it broke out of, like, you can tell this was a range based. I don't even need to go into lower time frame charts, but you can see the wicks. You can see that that's like a range. Okay, and then it broke out, it closed above, and that was the high made, and then we got a deviation, wicket, a deviation, couldn't close, couldn't close, couldn't close, key resistance. So there's no reason to believe, not to believe that we can't approach that. And then I'm gonna mark out the range low. Now what stands out to me here is this here. So I'm looking for the one that's got the most touches. Okay, now obviously I'll be able to refine it on a lower time frame, but let's go with that for now. Okay, so the other level that stands out to me is this previous quarterly high as well. Okay, so that is naturally going to be a SR level because that had a big rejection. So SR, so let's mark that out. That high comes in at 1.07294. Let's mark that out. 1.07. I was close. 294. I'm actually doing a crypto review so after this, so I'm gonna do this quickly before I do that. So on the monthly, we can see, okay, we're coming into this consolidation here, so we've finally started to break out. We're above here. As long as we're above here, that's the next that's bullish. So let's break it down further now. And if I break it down further, the next objective is going to be this monthly high here. Okay, so that stands out at so let me do this in different color, so we don't want to get confused with the levels. Okay, so with the monthlies we can find, lower objectives, because that's a quarterly chart, that's massive, you know what I mean. So we can find lower end objectives, and that high, this high comes in at 1.0878. 1.0878. Okay, and let's do that in well, since the monthly level, we'll do that in blue as well, just so it stands out. Okay, so that's a monthly level there, that's a monthly level there, that's a monthly high. Before that, what level do we have? We've got this level here as well, because that had a rejection, so that's a key SR level. So let's mark that out. Okay, and for this I'm going to do a different color so I know the difference between these two. So that low comes in at 1.07572. So this is how I do my top down, so it's a good example. So 572, let me just double check. 572 72. So it's a good example of a top down breakdown. Okay, so if you, those that wonder how I do my top down breakdown, this is exactly what I do. I identify the higher time frame range and then start breaking down further and further, okay, from there. So these are the high time frame levels, and the other level that stands out is probably going to be this low here. And the only reason I'm marking at that low is just there's obvious levels. On a monthly basis, okay, these are big levels for even for a day trade. Okay, I'm only looking for a short-term day trade, maybe a little swing trade. Okay, not a position trade. So what are the levels before it even gets to that are going to be in the way? If it is to go up into, this quarterly range high, there's going to be levels on the way there that we can anticipate. So this is why, as we go down to the lower time frames, you'll see levels that we couldn't see on the quarterly. So this low comes in at 1.08411. So that is 1.08411. And the reason why I'm going with the euro instead of the cable is because the cable crosses have already moved so much. So I'm looking for pairs that haven't moved as much. Okay, so if you look at euro GBP, that's bearish. So obviously cable, that's mainly due to cable strength. But then if you look at, and then pound Aussie is bullish, pound New Zealand's bullish. But if I look at euro Aussie, euro New Zealand, euro stronger than them both, so obviously they're gonna have some catch up. So even if cable is stronger than euro is still stronger than Aussie and Kiwi. So that's a potential. Okay, so there. So that's that done. Now let's go to the weekly. So now we've got those levels there. We know the next objective. So the next short-term objective is going to be that high there. So I mean, I'm just breaking down the pair to explain why I'm taking a Euro Aussie or a Euro New Zealand. So this is the breakdown. You have to be doing this. So this high here, okay, comes in out. So now we go down lower. We can see those are the levels. We can see more levels, okay, and you gotta mark them out, especially for day trading. For swing trading, I mean, you don't need to mark out so many levels because on a longer term objective you should go there. So high comes in at 1.07968, and with swing trading, you get 1.07968. With swing trading, you get more room. You give it more breathing space, just like the euro yen idea. Okay, so let's mark that out in like a grayish color. So we've taken the higher. I'm starting to reject. This is where the euro New Zealand comes in, and you'll see why. So that's a key level there. And the daily, we can see that's a high of the that's high of the week. So that's Thursday candle still there, Wednesday, Tuesday, Monday. So let's mark out the range. So what we've done is we've broken out of this key level here, okay, which is that monthly or weekly level. Monthly or weekly doesn't really matter, but it's a key level. So what's it doing here? So we've taken a previous week's high, which is here, and the lower time frame that's there. So let me give that a bit of girth, okay, so it stands out to us. Now we can start looking at our shorter time frame ranges now. See what I'm doing there? So before I continue, let me spark up a fag, as we do. So what's the ranges? So we've got intra-week high, so this comes in 16 September. Intra-week high, that's Monday's high, okay, there. And then let me go to the daily to mark out Monday's range, because I'm so used to MT4, right, that I still struggle with trading view even after so long. It's just made for alts really on quarterly charts. That's Monday's high, that's Monday's low, and that's last week's high. What are we doing? We're consolidating there. When you get a consolidation like that at a key level, that's usually a sign of strength really, okay? But what does it do? So it's two things. I mean, obviously it's got upside, okay? It's that key resistance, but it's not exactly rejecting. What's a normal reaction for rejection? Like this, like sharp. You see here, it's consolidating, had one more dip lower, broke out of the range, deviated back above it. It deviated a bit here, but then it cleared it, held it, then pushed up, and that was the signal there for a buy. What's it going to do here? So we know intra-week stops are going to be resting there. Monday's low, low of the week, and stops are going to be resting here. So how would I get into a long position? Would be, we know intra-week stops will be resting there. It's consolidation here. So we're taking out these lows. You got these highs. If it breaks above here, holds bullish market structure pattern for the entry confirmation, that would be there. That would tell me that if I'm still bullish Euro Aussie and still bullish Euro New Zealand, it shows Aussie stronger than New Zealand. Okay, so that would mean that Euro New Zealand would be the better play for a bullish case, if that makes sense. So where does this put us? Okay, apologies if I keep pausing it. I'm just watching my positions at the same time. Okay, so I do get a bit sidetracked. What do I do in this case? So I'm going to mark a smaller range, okay, and then it's the repeating pattern. So whatever pattern I show, okay, it's not something new. It's a repeating pattern, okay, that I use, okay, because that's how we get it. And then the confirmation comes in to increase the probability of the idea. So we know bigger picture we are bullish, okay, but after such a run up, it can pull back. So we're going to get clues as to where it's going to pull back. So let's quickly go back to the monthlies, okay. I did mix up my levels, so it's a bit confusing, but we know the first monthly levels there, that's a big support level because that had a big reaction. So 1.0760, it pushed up to that high to 1.0876. So for Aussie New Zealand, over 100 pips is big for such a market that's tightly ranged, and obviously you can see it's had a big reaction. So previously that was a resistance level, okay. So if I was long, how would I get long? I would wait for that retest, okay, and that would be an opportunity to get long, wouldn't it? So if I'm expecting a breakdown, I mean, what could happen? One thing could happen is if it's really strong, it could just keep continuing up and up and up, and then weeks or months later on it pulls back like this. What if this keeps pushing up? The fact that it's pausing is a good sign. So the biggest level for us right now, I mean, we're around this consolidation here obviously, but it's going to be last week's high. So this is what we do. We know a downside objective is going to be this level here. First objective short term, then here, these two levels here. So this is where the lower time frame structure comes in. So if we look, okay, if this breaks down like this, for example, if it breaks out of the range, we know we have resistance, which is here, so this would then be a deviation. Then we look for a breakdown, okay, to confirm breaking mark structure pattern. We know where the stops are resting, Monday's low into this key level as first objective, and if that breaks down further, the second objective is going to be here, and then further down would be here, okay. And so I wouldn't buy straight here. I'd wait for it to come into this level at least, and then see if it gave us the bullish structure, and that would be a deviation of this monthly level. If it got back above, that would be the first sign of buying, and if you got back above this range, Monday's low, then that would be the confirmation, then that would be a deviation of Monday's low. So just, I mean, I'm not even looking at a trade on this. I'm actually basing it on for Euro, Aussie, Euro, New Zealand, but as you can see, we're getting trade ideas off of this now. So if this happened, if this was to break down, Aussie would be weaker than New Zealand. That would mean that if Aussie is weaker, that means Euro Aussie would be the better play. So if this broke down, I'd go with Euro Aussie. On the other side, what's the upside objective here? So if we broke out to this range, held bullish structure pattern, first target there and then second target there, that would suggest Kiwi's weaker, Aussie stronger, which means Euro New Zealand long would be the better play. Okay, so that was just a basic breakdown. I know I probably got carried away there, but yeah, that's that. So that brings us on to Euro Aussie, Euro New Zealand. So before, let's look at basically the quarterly chart. So as you can see, Euro Aussie's been held. Okay, so you can say if it's at the open, I mean, whether it's Euro strength and Aussie strength, or Euro weakness and Aussie weakness, in this case it's like Euro weakness and Aussie weakness because they've been dropping. It's just recently, but it doesn't really matter. All that tells us is that they sort of equal strength. I mean, going up, going down, they're right at the open. They can't really smash above. What we can see on the higher time frame chart is we got that high there on a quarterly. So let's mark that out accurately. So that high comes in at 158.318. 318. So basically you can see we got a deviation there, and then once it cleanly smash on the quarterly chart, that's like thousands of pips, but this time it's holding. That's naturally bullish for us. Okay, so that puts me in a bullish mode. Now if this was a quarterly chart, what would confirm the idea? Well, we got this high here. Okay, we can't get above, so let's mark that out. That high comes in at 163.544. 163.544. Okay, so a clean close above, smash above, retest, that would be bullish. So let's go down to the monthly now. So naturally that puts on bullish mode. Oh, look what's happening on the monthly. We took our previous month's low, closed bullish. See the candle closes, they've been bullish, bullish, bullish. So the monthly candle has not closed yet. We've still got about 11 days left. So it's new day started, 11, 12 days left. Okay, it's rejecting already. So if this was the pricing in the wick, that would say as long as it stays above previous month's low, that would be bullish. Now, so it's already done accumulation, or using that as a mean. See that he's using as a mean. Then we've got the displacement away to new high. Is this a higher low compared to this leg? So the clues are here. So we couldn't take out this monthly low. This monthly low took out that monthly low. Then we had the stops there, big rejection. But then a break of this would have got short sell stops triggered, and then the rejection would say, oh, bulls are back in. And without a bigger time frame context, see how the bigger time frame context, like the quarterly, can come in play here. Not many people look at that. So what do we do in this case? Well, what I'm going to do is go back to my obviously empty 4 chart, okay, and break it down from there. So going to the month, this chart. So the only level, I mean, I need to really draw, I mean, let me just draw this level because I want to get the quarter level here. So that quarter level, that high comes in at 163.544. So if I go to the monthly chart, let me look at that level 163. Yeah, here it is. This quarterly level here, because that's going to be an objective, which just so happens to be near enough this monthly high. So that high comes in at 163.537. Obviously, it's going to be a couple of pip difference depending on the feed. It doesn't really matter. You don't need to hold it to the tick. It's just a directional bias we're looking for. Just call it 53. Okay. So the key level that stands out to me is going to be this level here. So that low comes in at 161.07. So let's break this down now. There. So let's break this down to the weekly. Now you can see we're coming to key support area here. It's carving a high. It doesn't matter if it was a. It's just the fact that big rejection. So we had a rejection. So what's the level that stands out to me here? It's probably going to be this level here. Why? Just by looking at the weekly, obviously we can refine it. The body's there. That was the high that caused this low. Breakout, retest, rejected, pushed up, deviated it, deviated again. Now it's back above the range, that monthly range now. Okay, that's what stands out to us. So looking at that monthly, have I drawn that correctly? 161.07, because it's looking a bit different. Obviously the monthly open and close is going to be different. So yeah, that's that low there. And the daily, we can see this is a deviation then. Oh look what's happening now. Consolidation, finally a breakout, coupled with the fact that what we just explained on the higher time frame chart, quarterly, naturally now our bullish bias is stronger because we've got higher time frame bias behind it. So quickly going back to the weekly, because that's the resistance level, last week's high. So let's mark out last week's high. That high comes in at 161.666. So I hope you're getting this. Okay, give me some feedback on this if you like more videos like this, breaking down one or two pairs in detail. So I believe personally, the best way to I can do, obviously I do this in the reviews anyway, but sometimes when you do one or two pairs, it gives you trading ideas, and it's more like it's more focused. 'Cause I can go into more detail when it's fewer pairs, whereas just a lot of pairs sometimes it's hard. So now we can see it's finding consolidation there. So we know that on the monthly basis, that's an objective on a monthly basis. Okay, so can we find nearer resistance levels? So the next resistance level here is going to be where? Well, on a weekly basis, can be this low here, isn't it? It's not even that much of a level. It's probably this level here, but because that low had a massive reaction, but 300 pip reaction. But I'm just going towards more conservative targets. So that low comes in at 163.081. Okay, 163.081. Now let's go to the daily, and we can see more levels now. Okay, so on the daily, look where we are. So if it was to make a clean break above, that would be objective. So it's finding resistance here, that's natural. Clean close above, retest. Whether it doesn't matter how far the retest is, because it can come down during the day here and then close above. Okay, just like I showed on the weekly chart. But that would be bullish. So we're on bullish territory now. So in the shorter time frame, where's the next resistance level? We can't ignore the fact that within this region here, so when I say region, I mean around here, there's going to be SR levels before that. Okay, so we just want to go with conservative levels, because if around there it's been sensitive, it's going to be sensitive going forward as well. And what I mean by that is, you can see here, without even drawing it accurately, let's draw it accurately. That high comes in at 162.303. 162.303. Okay, so let's mark the daily levels out differently. So the weekly we'll do in maroon or brown. The weekly levels is doing red. Okay, that's going to be a next short-term target, about 65 pips. Nice day trade. And after that we got this low here. Okay, so entry wise, what do I do here? So we know this is SR level. I don't care if it's gonna come into here and then reject, or if it's gonna break out. I don't care. What I'm looking for is a clean breakout. So I know I want to get on board. The idea is confirmed if it's trading above last week's high, because that puts us on for this target here and then that target there. So whether it's a retest here or pull back into here, I don't care. Once it unfolds, it may become clearer, but I know the probability for the longs are high when it's here. So what I'm going to wait for is a clean break above here. So if this is the consolidation, wait for a clean break above and then look for the longs there. Let's refine that down further. See what I'm doing? I'm doing the same thing I did on the 3-month, monthly, weekly. I'll do those because the monthly and weekly and quarterly levels are the ones that are going to have big reactions. So those are higher probable ideas. You don't want to be fighting those levels. So what do we have here? Breaking market structure pattern waiting for some sort of range. So on the hourly we can see this is the low that stands out to me. So let's do the hourly levels, lower time frame levels in a different color, say green. And the shorter time frame mark obviously this low because we've come off that level. So we don't know it's going to come off that level. So when you're trading, right, when it's unfolding, I don't know if it's going to come off that level. What I do know is this is the consolidation that's taking above that daily level or weekly level. So we shouldn't really come below here. So if I was to take a long, my risk would be there because if that broke, most likely we're going to come into there or even all the way down to fill this in into this consolidation. So to filter that out, what do? The breaking market structure pattern, which we're getting ready for now. Okay, if it does unfold. So I'll do this level here. So you know the main range low is the first green line. The range high is going to be, well, it's going to be last week's high. Okay, so I can refine it down a bit more to here, and let's go down to the lower time frame now. So I'm going to use this high here because just level to more reactions. Now if I was aggressive, I mean I could go in more aggressive. Okay, um, so if I'm assuming that deviations down the stop front, then we shouldn't really come lower. Okay, so if I do this, we're also just to add, we're at Monday's high as well, so we react to Monday high. So I could go in now. I could probably keep a hard stop here or here. Sorry, this is a consolidation that pushed above. But if it was to break this low and not reject, I'd cut it. If I want to enter with a high probability setup, with chasing momentum, because momentum is on a breakout. So if it breaks this with a higher time frame bias in mind, okay, never forgetting the higher time frame. See, we didn't just jump onto the H1, we broke it down. Then probability wise, we're looking for higher targets, like I mentioned, the daily, weekly, monthly levels. That should then confirm that we're ready. So if this is the consolidation that pushed above, risk would be there. Look for your, just to confirm, like, on the 5-15 minute, okay. It's just in case it is another fake out. If that confirms, entry there, and then higher up, and then as it moves higher and higher, we can refine it, stops from there to there on a breakout, and then towards our target. And see all this work for a later day trade. Okay, and obviously on the weeklies you can see, it's like waking out. Could this be an expansion? We still got 2 days left of the week. We got plenty of time left for the week. Okay, so that's my basic target. So I believe we still got 2 days left. So if I was say still wanting to go for euro longs, well, I'll just play it through euro Aussie. It's safer. Let's remove the dollar risk. Okay, they're more volatile as well. There's target one, and then obviously this is just conservative targets towards these stops here. Clean break above there into there, and then if it's gonna go there, there's no reason why this can't do a massive run. And if we just look at like a lower time frame perspective, we've sort of been stuck in a range. So if you remember the dollar yen idea we had, sorry, not like this. We sort of been stuck in like a range, sort of, okay, because this was a key level. We deviated. We've just broken out. We're just moving back above it now. So if this is consolidation, I would say this is a range band, really, okay. Then we go into trend mode, and when these pairs move, they fucking move, okay. I mean, just to quickly, give a similar example was dollar yen. If you remember this dollar yen idea, this was the low consolidation. Look where it break out. Trend mode. Let's hit the second objective around the 50s. More momentum is going to be this level here into this high, and then higher and higher. Okay, so I'd rather play this with like the CAD yen and Euro yen. Okay, but it doesn't matter which you pick. So that's Euro Aussie breakdown. So what I'm waiting for is that breakout. Like I said, if I want to be aggressive, probably keep a stop loss there, but that's more aggressive. So if I was to be aggressive, I'd use smaller risk. Like if I was to risk normally 1%, maybe risk about a quarter or a third, something like that. But if it's to break out, then there, wait for the bullish structure to confirm, and wherever the low is that pushed above, the risk will be there then. Okay, that's Euro Aussie. See, it's quite simple then when you break it down like that. We're not doing anything special. We're not doing anything magical. It's like that. Now, if you look at Euro Aussie, obviously that's looking at the quarterly chart. That's got time to expand. Okay. Now, if you look at Euro New Zealand, that's already expanding. So, where's the objectives here? So, what are the key levels that stand out? Obviously, it's this high here. But the levels that stand out to me, I'm going to be more conservative, okay? Because on a quarter level, a reaction like this, on a 5 minute doesn't mean much, but on a quarter level, it means a massive thing. So that high comes in at 1.74803. So let's do that, 1.74803. Call it 80, but me and my little OCD. Okay, so I'll do that. in black, okay, to identify that. Before I continue, got to spark up again. I'm in one of the smoking modes tonight, man, because I can't sleep and wait for the BOJ. Where's the next objective then? So you don't want to aim for the extreme. If you aim for targets, right, you want to be more conservative, okay? Because if we broke that level and rejected, that is the level that they can't break. If we, and the same thing can sort of be applied here. We broke it, we rejected. That's a couple of 100 points. We broke it again, rejected. That's So if this is around 1.64 ish, I'm just randomly 1.783. That's over 12. That's about 1400 pips. Cool, 1000 pips. Okay, that's massive. So that high next comes in at, so we know we got massive objective. So that high comes in at 178.26. So let's mark that out. 178.26. Close enough. I'm getting better at these lines. That's our quarterly work done. It's still bullish. If it's going to continue higher, that's the objective. And if I was to just like simplify it down, what's the level that stands out? I mean, it's going to be this level here, isn't it? And if it was to break out, just like the dollar yen, this is still on a quarterly basis. That's just still accumulation. If this was to break out, that's trend mode. Then this is not even trending. If this was a 5-minute chart, you wouldn't say this is trending. A trend is this. A trend is that. This is still accumulation or consolidation. So if it's to break out, there's a big move coming, and we're not even looking for thousands of pips. We're looking for a fucking day trade, 50, 100 points, 200 points. I mean, with pairs like this, 50, 100 points is nothing. These guys can do, like, look at pound Aussie, that little about 300-400 pip candles. Euro Aussie, Euro New Zealand can do shit like that as well. So if it does break out, if you wanted to avoid it and wait for the clean breakout, close above here would confirm. So this was a 5-minute chart and I was long here, for example. If I was long from here and my validation level was here on a 5-minute chart, a clean break above my validation level goes from there. So if that means that I'm there wrong, that means I've got a bullish bias. Objectives there then, and that was that. Where's that high coming at? 195, 1.95. So you can see why, just by the crosses. If the euro crosses are looking bullish, and I've got a bullish scenario for euro, but if it doesn't follow the plan, I'm not going to take it. But if another euro cross is going to look bullish, then I'll just play the cross for more points. So those are two near-term objectives, okay? So that from 177.8, 1.78, that's about 300-400 points there, okay? So let's mark out one more level, which is going to be the open. So that's a big level as well, the open. So the open here comes in at 175, 179.5, 175.335, 175.335. So I want to do that in a different color so I can see that it's open. And with the opens I usually do purple and thin. Okay, that's just the quarterly chart done. I know it's going to be a long ass video, but it's worth it. Okay, so now I can see another level now on the monthly level. What level stands out? Well, you can obviously see we reacted off of this high here. That's obvious. Okay, so let's do that in black. So I'll do the quarter levels in a thicker black, monthly levels in a thinner black. Okay, and then this level here. Okay, so we've taken out that swing high there. So that high comes in at 173.071. 071 there. So that's that done. And then the other level that stands out is the open. You know the importance of the opens. We've still got time left in the month. Pairs like this can expand quickly. So that open comes in at 174.266. 174.266. 266. Okay. Just to highlight that, I'll do that in blue so I know what that is. So thin levels are going to be the quarterly open or the monthly opens. Let's go down to the weekly now. So on the weekly, where are we struggling with? Well, that's that quarterly level, finding some rejection out of that. What high have we taken? This high here. I mean, I can include that high there, but this is a more recent high there. So let's do that level there. So that open comes in at, that high comes in at 174.709. Let's do that now. 174.709. 4709. Okay. Let's do that in a different color. Maybe too much blue going on. It's in green, so I'll do that in a thinner color as well. everyone get confused now, but I mean, you don't need all these levels. I mean, once you get to like whatever chart you're trading off, so I draw them all out, and then whatever the more immediate levels are. So if I'm just dealing around here, the only levels I really need is probably this level, and then these two levels there. And then once it breaks that, then I can add that level. Plus, on the quarter levels, I mean, they take time to get there usually because it's hundreds of thousands of pips away. So, so that's that. So let's go back to the weekly. So I'm gonna mark out the open of the week and last week's high. So in this case, I'll mark out last week's high. Okay, so that high comes in at 173,860, 173,860. So I'm gonna go back to shame on how to colors. Let's do it in red or brown or whatever that is. Okay. Obviously, like I said, you won't have these so much levels on your chart. So that's near enough the weekly open anyway. So if that's Thursday, Wednesday, no Wednesday, Tuesday, Monday, and the open comes in. No, the weekly opens here. So that's near enough. Okay, that's good enough for me. I mean, you can add it in, but I don't need to. So we know in the higher time frame we're bullish. Okay, now we do accept the fact that we are resistance. So what do we do in this case? So if that's last week's high, let me just confirm because I'm confusing myself now. Yeah, that's last week's high. So that's going to be a natural SR level. So from that high, we had a 173.85 down to 172, near enough 100 pips, call it 90, 100 pips, okay? So ideally, resistance becomes support, but it's not as simple as that. Market doesn't work like, identical like this. It takes time, it ranges and everything. So now we can, this is where the range is coming. So we got that high there, that stands out to me. Okay, because that's swing high. Like I said, the same thing I do in the lower time frame, a higher time frame I do in the lower time frame. So I'm not even gonna bother going to the MT4, the good old MT4 platform. Let's give that a bit of girth. So for these, and then obviously it's gonna be this level. So where the lows, there's gonna be lows there. So I'll go to the H1 now and separate it out. Session breaks. Okay. So I mean he is showing a new daily, but it doesn't really matter. I mean, yeah, I'm not gonna fuss too much. But we know this is gonna be stop stretching there. So just like we did, we got a clear range we can see. So that range, I mean, I can refine it a bit more down into here. Why there? Just the touches, okay? So the touch is there, but once it breaks out, retests it there, the bodies can't close there, and then the perfect touch there. So we know that's a clear range level. So how do I play this? Well, we know this is a level as well. Here. So what does it do? Ideally, a clean break I want to retest. I mean, here it consolidated, so these were the highs there. It could have come off there. So scenario one. Okay, let's mark out the obvious scenario. It comes into there. Okay. Now, I'm not going to blindly buy this because if it breaks below here, because we're coming off a key quarter level, it could have a deeper pullback. The higher time frame levels have bigger reactions. However, what would confirm the idea? So using those same levels, this is a key level as well. First scenario is, okay, that's a key support level. If it gets back above, then that's a deviation, bullish market structure pattern. That's the entry, risk will be there, aiming towards, short term this level here, it's a higher time frame level, and then towards this high here. Step one. Further confirm the idea, if it gets back above here, then that's a bigger deviation. Okay, and then depending on if this is the low that took it above, the risk will be there, aiming for there. So if you're not confident enough there, need more confirmation, you could take it there, and then there. Okay, and if it cleanly breaks this, okay, then that red level there into these highs here then. Okay, now what if it took off from here? Well, what do you do in that case? I mean, you can see the same thing repeating here. That's a key level, retest it, deviation, get back above it, so broke the high, break bullish market structure pattern. There's the entry, there's your risk. If this is the consolidation, it gets back above, it holds. Or further confirmation would be a break of this high here. That's the SR level there, into there, whatever you want to enter, it doesn't matter, because then the low is confirmed. You go in validation level. Don't think in terms of one precise entry. I don't. So the way I do it is, I mean, I shouldn't say don't think in terms. I'll tell you how I do it in the sense where am I wrong? When I know when I'm wrong, I don't give a shit about entry as much. I mean, sometimes it's clear that it's going to give me a nice entry. Sometimes I don't know, but I want to be in the position, so I can put a small position in, and then each time I get a new validation level, it's in that video. Remember the AUDnzd video? Some of the entries I wasn't even fussed about the entry, but how many I did about 5-6 positions on that massive swing trade by 200-300 pips. How did I do that? As soon as I got a new validation, I entered, and I said that because I recorded that over a couple of days, and I said in that I'm not fussed about the entry, and before you know it, you got a decent size, but it's not massive risk. It's small. It's still maintaining. Say you want maximum 1% risk on. So say I entered here. Sorry, say I entered there. Invalidation level there. This is the consolidation or down move that pushed you above. So we shouldn't take that out, especially if you've broken a key level. Say that's the first entry stop loss there. But as soon as that breaks out, your risk is there then. Okay, obviously this would be an objective, okay, because you're anticipating a reaction of a key level. But say you were still bullish and that key level was here, for example, and this isn't there, so your risk is reduced from there. So say, I don't know, you've reduced it by, I don't know, say 0.5%, for example. Well, on this setup you can add that 0.5% on, so you're adding and adding and adding, so on and so forth. Okay, so what if it takes up from here? Well, same thing again. Okay, and on a lower time frame you can see that's a little SR level there, a little support level there with that little bounce. That's a deviation. Now because it's that resistance here, this is where it comes down to. Just if you saw the pattern on its own, it wouldn't be enough, because you wouldn't be taking into account that. So say for example it isn't going to come down lower because it doesn't necessarily have to. Then a clean break above, range high, SR, bullish structure, breaking mark structure pattern, that tells you that okay, they want to go higher. If it gives you that, then that's the entry. If it doesn't give you that, it could be a possible fake out. But if it did give you that, you could go. So if it did this here, the risk would be this low in towards that level there. If it did go above this level and then started breaking down from that, that would be an exit, because that would mean it's done a deviation of a key level and wants to go lower. Then we wait for possible entries, maybe around here or whatever I explained earlier. Okay, so that's Euro New Zealand now. So these are two potential setups for, we got 2 days, 3 days left of the week. Well, 2 days really. So that's Euro New Zealand. So I know it's a long video, I know it's a very, but it gets the point across. So whatever I've explained here, you can do that, on any asset or any asset, or any market. Okay, so I hope that helped. Just give me your feedback, what you think of it. If there's anything you're confused with, I can answer it. Okay, so yeah, that's that.